Welcome to the deep dive. Today, we're plunging into something really crucial for anyone in the financial world: risk management in investing. We're going to try and unpack what it really means to, minimize potential losses while still aiming for those returns. And we're drawing insights from prudent investing, strategies for risk management. Okay, so what really jumped out at me right away was how this source talks about risk management. It's not just something you do. It calls it a discipline.
Right. That word discipline, it implies something much more structured, doesn't it?
Exactly. Intentional, not just reacting randomly.
Yeah, it suggests a kind of consistent practice, like training almost. It's not just hoping things go well. So what does this discipline actually involve for someone trying to be strategic?
Well, that leads us right into the core strategies, the things you actually do. The source breaks it down. Yeah. Diversification, setting stop-loss limits, really understanding your own risk tolerance, and then regularly reviewing your portfolio.
These aren't just isolated tips, are they? They sound like they need to work together.
Definitely interconnected tools.
And if you connect that to the bigger idea, these strategies are basically how, smart investors handle the risk they have to take. It's about controlling it, being strategic, rather than just, being pushed around by the market. What stands out to you about that idea of controlling risk?
For me, it shifts the focus. It feels more active, less like you're just along for the ride. Take diversification. The source makes a point. It's not just about having lots of different stocks.
Right. That's a common misconception. It's really about different asset classes, stocks, bonds, maybe real estate, commodities, things that hopefully don't all move the same way at the same time.
Understanding that correlation or lack of it.
Exactly. If everything tanks together, you weren't really diversified in a meaningful way, were you?
No, not at all. And then there are stop-loss limits. You set a price. If it drops, you sell. Sounds simple.
But it's tricky in practice. Set it too tight.
Yeah, normal market volatility could just kick you out of a good investment.
Set it too loose.
And it doesn't actually protect you much when things really go south.
Yeah.
It's finding that balance, right? Specific to the investment and, you.
Which ties straight into assessing your own risk tolerance. And this isn't just a quick quiz.
No, it's deeper. How much can you actually stomach? Seeing your investments drop without panicking. What losses can you realistically handle?
It's personal,
Right.
Really personal. And that understanding dictates how you use the other tools, how widely you diversify, how tight those stop losses are.
And it's not static either, which brings us to the review part. Regularly checking in on your portfolio.
Absolutely. Life changes. Your goals shift. Market conditions definitely change. So investing can't be set it and forget it. That review is your chance to adjust, to make sure everything's still aligned.
So what does this all boil down to? Why go through all this disciplined effort?
The big payoff, according to the source, is protecting your capital, keeping your base intact.
Which isn't just about avoiding losses today, right? It's about staying in the game.
Precisely. It ensures your longevity. It means you have capital available to potentially seize opportunities later on, maybe when things are cheaper or when others are forced out.
It really is about playing the long game, making sure you're still at the table for the next round. So our deep dive today really highlights that investing isn't about trying to eliminate risk completely. That's impossible.
Right. It's about mastering the discipline of managing it, being prepared, not necessarily fearful.
It's strategic.
Which leaves us with a question for you, the listener. Think about this. How might consistently applying these strategies, this discipline, change how you approach future market ups and downs? How could protecting your capital now actually unlock bigger opportunities for you down the road? Something to consider.